morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks follow Wall Street to their worst day since the August meltdown as worries about U.S. and Chinese growth fuel a flight from risk. Nvidia's record rout wipes off $279 billion on renewed worries that the AI frenzy has gone too far. A DOJ antitrust probe has pushed the stock down even further. Plus, oil extending declines this morning after a 5% drop on Tuesday on the possibility of political unrest easing in Libya. Focus now shifts back to OPEC Plus plans to boost output even as demand concerns persist. So much to get through on the show today. It is quite the day for global markets. It has just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's not waste any moments and get to these markets because we saw quite the close yesterday for S&P down more than 2%. NASDAQ closing down more than 3% lower on this session. That negative tone has continued on into the overnight session. You can see these futures are still pointing towards a negative open as we head towards the U.S. open in a couple of hours' time. The catalyst, well, it could be anything really, but growth concerns in the U.S. We had a weaker than expected ISM manufacturing number come through. We had a big sell-off for Nvidia. I'll get to that in a moment. You had a tech sell-off. So all of these things together have indicated that the continuation in this risk-off theme continues to pick up speed. We've got the MSCI Asia Pacific Index also down 2.3% overnight. Major moves in the Nikkei also tracking around 3% lower. We'll get to that in a moment. And then yesterday, some huge moves in the oil complex as well. At one point, oil was down about 5%. So a lot of technical moves in addition to, as we've been talking about, a lot of those concerned about fundamentals. But let's switch over because I just want to highlight for you how big a move we had in Nvidia. Almost 9%, almost 10% lower by the end of the session. But in terms of market cap, that translated to $279 billion being wiped off the value of that stock. And guess what? That was the largest wipeout in history. So some context here as well, and just really shows you how much of a leader Nvidia is in terms of these market moves. And on a day when Nvidia loses 10%, well, clearly it's going to have ramifications on the broader market. And just switching over as well to our next terminal chart for the day that I just want to show to you too, and that is just showing how much these semiconductor stocks in the U.S. have also pulled back on back of the move in Nvidia. It's having knock-on effects across the semiconductor space, the biggest drop in 4 years for that SOX index. All right, let's check in on how markets in Asia are faring. Avril, the picture is not pretty. Tell us more.
Not pretty at all. As you say, knock-on effects, not just Nvidia and other U.S. peers, but the ones in Asia as well. Look at how the likes of SK Hynix, TSMC are faring today. Among the biggest drags on the Asia stock exchange, MSCI Asia Pacific. These are, of course, the direct suppliers to Nvidia. And we're seeing these names among the big drags for a lot of the major indices in the region. For example, the Nikkei, Kospi, TAIEX, they're seeing their worst day since the August meltdown. And of course, it is those concerns that the AI rally has run too far, too fast. But you also have some competing narratives coming through, because if you look at some of these AI names in the Asia Pacific, they've actually seen a fair bit of selling already. When you look at their forward PE ratios, for example, they're around the 2019 levels. So this gives you a sense, according to some of our MLive blog contributors, that maybe Asia tech is seeing signs of bottoming out versus what we're seeing in the U.S. Jumana.
Avril, thank you so much for that overview. So let's talk more about what we've been seeing in that one specific stock, Nvidia, which has suffered a record single-day rout sparked by worries surrounding the AI mania. And that was before Bloomberg broke the news of subpoenas from the U.S. Justice Department as part of antitrust investigations. Lots going on with that stock. Let's bring in tech reporter Annabelle Jewelers, who joins us live from Taipei at one of Asia's biggest industry events, SemiCon Taiwan. So a fortuitous day to be there, I would say. Annabelle, just walk us through, first of all, what happened in the trading session with Nvidia? Why was the stock down 10%? And then what was announced subsequently with that Department of Justice probe?
Yeah, well, these are really the two key factors that weighed on Nvidia's price. I mean, intraday, let's just talk about that first. So you had concerns around the health of the US economy, the Chinese economy, so that fed into recession fears and broadly weighed on stocks. What weighed on Nvidia in particular and the AI spectrum chip stocks was this concern that perhaps the AI hype has gone too far, too fast. And questions around that really surfaced in Nvidia's earnings that were good, but not good enough to beat every single analyst estimate on Wall Street. So that fed into it. You also had two analyst commentaries coming out from JP Morgan Asset Management and also BlackRock's Investment Institute, and both of those questioned the timing of this. Yes, the AI revolution is coming. Is it going to be in the next few quarters? Perhaps not. We're looking at something that could be in the years to come. And so then there's that question around valuations and AI spending. Do you want to keep putting such a high price tag on Nvidia when we haven't seen it broadening out yet past the tech companies and the hyperscalers? Overnight or after trade, we also had another headline coming through. This was a Bloomberg exclusive relating to the DOJ, the US Department of Justice. They're conducting an investigation into whether Nvidia is creating a monopoly in the market at the expense of others, concerns around the exclusivity of its chips, whether it's making it harder for chip companies to switch to other suppliers, and as well penalising buyers that choose to use other non-Nvidia chips as well. So that is a big question. Companies like Nvidia, others have been subpoenaed. They're now going to be legally obliged to pass on information to the DOJ.
Yeah, and interesting to see the statement that was put out from Nvidia that we have up there. Nvidia wins on merit as reflected in our benchmark results and value to customers who can choose whatever solution is best for them. And about what does this mean for broader markets, and what are people telling you at the conference today?
Well, this is one of the biggest semiconductor events in Asia of the year, and there's 85,000 people that are going to be at this event today. So a lot of different delegations, a lot of different companies that are present. But of the people we've been speaking to so far, and of course across the week in Taipei, we've spoken with other executives, company heads about this very question. Do we have any risk that Nvidia outlook and the concerns that we've seen from investors, are those justified? What we're hearing so far is that we're really still at the very start of this AI revolution. There's a lot more to come as we look for more applications. It's not just that shift or that demand for cloud servers. We also could shift to on-device AI, where you've got AI computing that's being carried out on the device itself. That could drive further demand for smartphones, the PC market. Beyond that, you've also got those chip advancements. We've been talking to guests about that as well. Chip advancements specifically in the advanced packaging sector. So instead of shrinking the size of chips, that's been such a big focus of the industry, you're building up instead. So there's a lot of different things we're talking about, a lot of key executives that are here today as well.
Bloomberg's tech reporter Annabelle Drewlers, and again, repeating that it is quite a good day to be at a tech conference to see what the broader industry is saying about some of these moves. Let's bring in Samy Chaar, Chief Economist and CIO for Switzerland at Lombard Odier. Samy, good to have you on such a big markets day. What do you think was the catalyst for the sell-off that we saw in the U.S. session yesterday? Was it just that ISM manufacturing print?
Well, it does seem that a big part of what has fueled the concern is growth slowdown. And the growth slowdown is really seen as being centered in this manufacturing sector. But we both know that this hasn't been a manufacturing cycle, right? Manufacturing has been in disarray and the weak spot of the global economy, and particularly the US economy, for quite some time. What will be much more important to assess the strengths of the cycle, and particularly the US cycle, is what happens to the consumer, the signal we get from the job market, and eventually the non-manufacturing part of the economy. So it's a little bit too soon to give into that growth weakness narrative, especially considering that it's coming from an area of the economy that has been weak for so long.
Yeah. I mean, the thing is, context is important here, and I just flagged at the top of the show that even though we've pulled back 2% in S&P, we're still very, very close to all-time highs, around 2.5%, 3% away from these all-time highs. So it's not significant in the context of how far we have come along, but perhaps it's reflective of a market that may be running out of steam. What do you think the index needs for that next catalyst higher?
Well, it is going to get basically what it needs, which is a couple of rate cuts, right? We do think that the Fed is going to embark in this trajectory of bringing policy rates closer to neutral, that is going to bring some oxygen back into the interest rate sensitive sectors that dearly need lower cost of capital, such as the manufacturing sector. But very clearly this is going to be a catalyst for the coming 12 months. We're going to see the Fed cutting rates. It is going to support some parts of the economy. And on the other hand, what we need is basically the confirmation that what has driven this cycle, which is a consumer services-led cycle, is still doing okay, right? So we're going to get the jolts today in the US. We're also going to get the payrolls on Friday. And really, you don't want to be caught on the wrong side of this, right? If we continue to see fundamentals supporting the consumer with, again, perhaps labor markets that are adjusting but not necessarily showing signs of outright weakness, it's going to be pretty okay, right? So this is a consumer-led economy. We just need to make sure that what fuels that consumer continues to do well.
Yeah, sometimes I wonder if we're just overthinking or overanalyzing by looking so much at the economic data, because what has been driving these indices has been tech-based and the hype around AI. It is one stock yesterday that was in focus. Nvidia pulled back 10%, and on the back of that, you see all of the other semiconductor complex sell off too. How right is it, in your view, that it is one stock that determines the sentiment for the broader market?
Well, first of all, when it comes to the sentiment of the broader market, context, as you said, is very important. We're in September. It's always, a weak seasonality. We're in September during an election year. So, having some form of a weak September is not something that is totally out of the traditional patterns we get from usual trading years. And then when it comes to tech, I mean, there is going to be still a lot of support coming from the IRA and the CHIPS Act. So it does feel that this story is going to get some support, in the coming quarters. So it's not necessarily a sector that we see weakening across the board in the coming, at least for the rest of the year. So it remains a well-bid, well-supported sectors with, again, a lot of focus, especially in this fragmented economy.
Yeah, well, big number coming up this Friday with the non-farm payroll prints. It's going to be a big focus for markets. And then, of course, as you mentioned, another big event coming up, that is the U.S. elections. Are you therefore turning more defensive given some of the risks over the next 8 weeks or so?
No, not necessarily so. I would say that we're happy with our positioning, which is a balanced positioning, very close to our strategic levels. This is an economy where we continue to like equities because companies, after all, are making money. We continue to see decent profit growth. It's expensive, so we're happy to be close to our strategic level here. While on the fixed income side, I mean, there is still pretty decent yields that we can benefit from. Going forward, the trade that we would like to be doing is eventually take profits on some of those fixed income instruments and eventually get back into cheaper equities. So, clearly there will be some trading before the US elections, but today I would say we're relatively happy with that balanced portfolio.
Makes sense. Samy, always good to talk to you. Samy Chaar, Chief Economist and CIO for Switzerland at Lombard Odier. Well, up next, it's not all about equity markets. Oil sliding too on glut concerns as focus moves back to OPEC Plus plans to boost output. More of that story next. This is Bloomberg.
There's a orderly unwind and a disorderly unwind. The Fed cut is expected. If they were to be much greater or something like that, it's probably going to be a very orderly process as we move back to lower risk-free rates of return, or think about the cost of capital holding oil in the financial as well as the physical, where that's going to begin to unwind.
Well, there's orderly and disorderly unwind. That was Jeff Curry, Carla Group Chief Strategy Officer, big name in the commodity space. Well, oil is extending declines after a loss of almost 5% on Tuesday over the possibility of political unrest easing in Libya as the market shifts its focus back to OPEC Plus plans to boost production. The central bank governor, Sadiq Al-Kabir, whose attempted ouster prompted Eastern authorities to cut crude production, tells us he believes a deal between the two governments is imminent.
I think I'm going to take the challenge and to be there, inshallah. Yes, strongly. As per the agreement between the parliament and the High State Council.
For more, let's bring in Anthony DePella, our Middle East energy markets reporter. We've been keeping close tabs on this Libya story. Yesterday, we were on the show talking about, even though there had been oil disruption, we weren't seeing much of an impact on the price of oil. And then it emerged yesterday on back of this Bloomberg interview that our colleague conducted, that there may be a resolution in sight. So maybe let's just start with Libya and the developments there and what it could mean for oil production.
Yeah, good morning. Well, that would be bringing back about 500,000 barrels a day of oil that's been taken off the market already because of that impasse. That's a political impasse over the central bank, which led one of the two governments in Libya to order production and exports halted. So that's a big drop in oil in the market. Libya produces about 1 million barrels a day. About half that is off now, and it's kind of a moving target as well as fields come up and down. So it's very uncertain. And we hadn't seen much of a jump in the market. Markets even were very steady because they're really focused on the demand issue. So even with that uncertainty in Libya, as I said, Libya goes up and down, so it's really hard for the market to take a gauge on that. Even with that, we didn't see that jump up, but when we did hear that news that they could be close to a resolution, that was enough to bring those fears back and bring oil down in the market.
Yeah, the question investors always have is, what was the trigger? Why did we get that 5% sell-off yesterday? It could be this news. It could be just a combination of factors. But for me, it seems that Chinese PMI figure that came out earlier in the week was also a major catalyst for the downward pressure on oil. Yeah,
there are a lot of big things that are holding oil back, a lot of different factors that are weighing on it. And as we said, that Libyan thing wasn't enough to break through that bad news when it was looking like it was coming off the market. And that's because of weak Chinese demand, which has been a concern throughout. People are looking at the weakness in the construction sector, the weakness in demand and refining there. On top of that, we saw some weaker manufacturing data out of the United States. So if you're looking at the two biggest economies having weakness, China already being weak, and then looking at those potential recession fears coming back again. Now we'll see if that's borne out, obviously, in the United States. But that was enough to kind of spark that concern in oil markets.
And we haven't even talked about OPEC, OPEC Plus yet. WTI is trading below 70. We're at $69. Brent is way through that $80 level that we thought was the sort of soft level that OPEC Plus were hoping to achieve. How are the market moves likely to influence what they do in Q4?
Yeah, for sure. When we spoke yesterday, I would have told you that markets looked pretty much okay for OPEC. They were within shouting distance of that 80. Yeah, exactly. But what a change today does. Of course, OPEC is also looking through the daily moves as well. So they're probably looking kind of at a year average. But when they look forward to what's going on, if they do see that weakness in the market, if they do bring back that oil into the market, a lot of the analysts and investment houses are forecasting a surplus of oil already towards the end of this year and then increasing into next year. So a surplus means oil building up in storage, which is what OPEC doesn't like, and that weighs on the price. So these factors are going to be playing into OPEC. Clearly, we haven't seen any announcements from them, so that would mean that June agreement to start rolling back some of those voluntary cuts in October, that still stands at the moment.
Yeah, still stands. Well, let's see if things change in the next couple of weeks. Clearly, they're looking at markets as well. Anthony DePella, thank you so much.
Thanks very much.
Coming up, the U.S. Justice Department has announced criminal charges against 6 senior Hamas leaders. We'll bring you the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. The U.S. Justice Department has announced criminal charges against 6 senior Hamas leaders on counts of terrorism and conspiracy to kill Americans. The charges were filed in February, but were only just unsealed days after 6 hostages, including an Israeli U.S. citizen, were slain in the Gaza Strip. The counts relate to the October 7 assault on Israel, as well as a string of other attacks over more than a decade. For more on this, Paul Wallace joins me now. He leads Bloomberg's MENA Economy and Government coverage. Paul, so why are they announcing these charges now? They started looking into it, I believe, from our reporting back in February.
That is a good question. As you mentioned, they were filed in February but only unsealed yesterday. It's unclear why the Justice Department has done that. But it's possible that last weekend's discovery of the 6 Israeli hostages who were killed, including an Israeli American, might have had something to do with that. Merrick Garland, the U.S. Justice Secretary, did mention those killings on Sunday when he made this announcement.
So here's what I'm trying to get my head around. The U.S. are charging these 6 senior Hamas officials with criminal charges. And at the same time, they're also pushing for ceasefire discussions. What does it tell you about the U.S.'s position if they think that one side and one party that's privy to these discussions are criminals?
It does tell you that they're trying to thread a needle in a very complicated situation. As you've said, they are one of the main mediators between Hamas and Israel. Although they're not dealing directly with Hamas, they are one of the main mediators along with Qatar and Egypt, and they're really pushing the two sides to get a ceasefire. At the same time, of course, they are now charging the likes of Yahya Sinwar, who is Hamas's leader, with terrorism and conspiracy to kill Americans. In practical terms, it might not make that much difference. I mean, Israel has stated that it wants to go after all the top leaders within Hamas and kill them. And in fact, one of the people who was among the 6 charged by the Justice Department was Ismail Haniyeh, who was assassinated in Tehran in July. Israel has stated that it will continue to state that it will go after Hamas's leaders no matter where they are, and it's still saying it wants to completely destroy the group as a military and governing operation. So the charges have gone down well in Israel, but I'm not sure they're going to make that much difference in terms of the fighting on the ground.
Yeah, and indeed what we've seen in the past 24 hours is Netanyahu's stance has hardened even further. He's even more defiant with this hardline approach towards Hamas. Paul, thank you very much for bringing us that story from overnight. Paul Wallace, leading Bloomberg's MENA Economy and Government coverage. All right, quick look at markets. Given the major sell-off that we are witnessing right now, and these are how the futures are indicated, S&P and NASDAQ also seen opening up in the red, another negative session after pullbacks of 2% and 3% respectively yesterday. Look at the euro. The Euro Stoxx 50 futures also looks like it's going to open up 1% weaker as well. So the theme is risk-off, led by the tech space. Coming up, we're going to be talking more about oil with our next guest, Carla Slim, MENA Economist at Standard Chartered. That is coming up next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks follow Wall Street to their worst day since the August meltdown as worries about U.S. and Chinese growth fuel a flight from risk. Nvidia's record rout wipes off $279 billion on renewed worries that the AI frenzy has gone too far. A DOJ antitrust probe has pushed the stock down further. Plus, oil extending declines this morning after a 5% drop on Tuesday on the possibility of political unrest easing in Libya. Focus now shifts back to OPEC Plus plans to boost output even as demand concerns persist. It has just gone 8:30 a.m. across the Emirates. I'm Joanna Bersetchi in Dubai. Major moves in markets. We saw a big market rout yesterday with that big pullback in S&P down 2%, NASDAQ down more than 3%, one stock in focus, Nvidia down almost 10%. I'll talk about that in a moment. But for the moment right now, you can see that these U.S. futures are also building on from the risk-off session. Also overnight, the Asia-Pacific MSCI index down 2.3%, the Nikkei down 3%, as well as some of these semiconductor stocks, the chip stocks, the tech stocks in Asia also get hit from knock-on effects from the U.S. session. And then oil in focus today. We were talking about that early on the show. Massive sell-off yesterday. The complex was down about 5%. Today, down another 0.5% as well. So it's not only fundamentals at this point, but some technicals are beginning to weigh on the energy complex. Switching over, I just want to show for you how big a move we had in Nvidia yesterday, because the stock was down about 10% in the session. And by the way, this was even before that Bloomberg news broke that the Department of Justice are looking into antitrust and launching an antitrust investigation into Nvidia, which pushed down the stock even further in the after hours. But during the actual trading session, it dropped $279 billion. That is the largest wipeout in U.S. history. And, of course, that had an effect on the semiconductor space as a whole. The SOX index, that is the ETF that tracks semiconductors, saw its biggest drop in 4 years. So that is the setup. Let's check in on how markets in Asia are faring. Avril is in our Singapore studio. A risk-off session, Avril.
Absolutely, Jumana. We are seeing steep losses across the board in the region, and the tech-rich gauges in particular, Kospi, TAIEX, that is where you're really seeing the bleed. Now, this is against the backdrop of those declines in chip names after Nvidia's performance overnight and those concerns about the AI froth, that this rally has gone too far, too fast. And as we look at these declines, note here that this sell-off is the worst we've seen since August. That crash that we saw in markets. And keep in mind as well, part of what triggered that was the moves that we saw in the Japanese currency, that yen shock. And don't forget how a day ago we just heard from Ueda just cementing how they are really determined to normalize monetary policy. So keep that in mind, even as we look at what we're seeing across the board. Now, on the mainland stocks, we actually saw in the depths of the August sell-off, the CSI 300 was one that was outperforming. Today it is in negative territory, but faring not as badly versus the rest of the region. Jumana.
Yeah, well, quite stark moves, though. Even though you say it's not as bad as the rest of the region, we're still looking at 3.7, almost 4% pullback in some of these Asian equities. Avril Hong in Singapore. Well, going back to oil, energy pushed lower after a loss of almost 5% on Tuesday over the possibility of easing of political unrest in Libya, shifted focus back to OPEC Plus's plans to boost production. Brent slipped towards $73 a barrel, while West Texas Intermediate, the WTI complex, fell below $70 for the first time since early January. We've pretty much wiped out all of the gains for the year now in the oil space. Joining us now is Carla Slim, MENA Economist at Standard Chartered. Well, the price of oil is important for this part of the world. How close are you monitoring the developments?
Good morning, Jumana, and we are definitely monitoring the developments and the volatility. We've seen increased volatility over the last month, sharp price movements, and oil has not sustained the momentum that we've seen on the back of the Libya shut-in of production that you've mentioned. Yeah. There is very little to no geopolitical risk premium priced. We would argue that's probably correctly so. And the market seems very focused on sentiment is weighing down due to these demand concerns that we would argue are more forward-looking. Actual demand hasn't fared that bad.
If oil were to end up here and stabilize at around $70 a barrel, does that pose downside risk to the GCC economies?
It does pose downside risk, but what's equally bad for the GCC economies, it's downside risk to oil prices, but also the oil price volatility is not very welcome because it dampens planning. It doesn't make it easier to plan. You were mentioning OPEC Plus, but also planning for budgets. We're nearing into Q4. Q4 is the time where we start planning for the budgets for next year. So oil price volatility and downside risk to oil prices doesn't make it easier.
But you look at the activity indicators. We'd have a bunch of PMIs that came out in the last couple of days. Saudi came in slightly better than July. We had the UAE PMI come out just a short while ago today, also better than July. So business activity on the ground actually is pointing in the right direction.
Absolutely. We are very constructive on the fundamentals of both Saudi and the UAE's non-oil growth. On the PMI specifically, they're up month on month because of the seasonality. Yeah. So typically it's normal during the summer months to see some softening of the PMIs from the peaks we had seen in Q4 last year. So we would expect them to continue recovering as well.
Yeah. Later today, the IMF are releasing their Article 5 assessment on the Saudi economy. We will be speaking to them later today. But what we know is when they released the headline World Economic Outlook growth levels about a month ago is that they saw a massive downgrade for the Saudi economy, namely because of how much, well, the production cuts that have come through from at a Saudi level, at a government level. To what extent do you think can Saudi continue to hold on to this position, knowing that not only are they taking barrels off the market, but the price of oil has started to drop now? So it's a double whammy. Not only are we talking about volume, but we're also talking about price headwinds.
Absolutely, Jumana. You said it correctly, that there's a price effect and there's a quantum effect. Yeah. And both of them affect the fiscal space. I would argue it's the quantum effect on a standalone basis that affects growth, because we talk about real GDP growth, not nominal. So the volumes of what they produce has a direct bearing on growth. Now, on the IMF Article 4 report specifically, our Saudi growth forecast is slightly lower than the IMF's, because the IMF hadn't really taken into consideration all of the cuts yet. So we may see some revisions, but I think we're going to see a very different Article 4 report from the IMF this time around, because last year the IMF was cautioning about overheating in Saudi's economy. Now that many of these projects have been scaled back and capex seems to be softening, we're probably going to notice a much different tone from the IMF.
Sort of a reprioritization. One of the other big themes in Saudi Arabia is, of course, their goal to attract more FDI. And my colleague Christine Burke in Saudi Arabia was speaking on the show just a couple of days ago about how Saudi have introduced these reformed investment laws, with one of the goals, not the stated aim, but one of the goals obviously is to attract more FDI into the country, to make it easier to do business. Are they likely to succeed?
We think FDI will continue rising, especially after the year-on-year drop we saw in 2023. We believe that FDI will be, the target that they've set for FDI for 2024 will be attained. It's just over $30 billion, so that would be an increase from last year. But the FDI target for 2030, which is $100 billion,
yeah.
We're still a bit some distance away from that. But all of these reforms taken together will contribute for that FDI to continue increasing.
Yeah, what do you think needs to be done to attract more FDI? And by the way, it's not specific to Saudi Arabia. I've spoken to Saudi officials in the past, and they say globally there's an FDI issue. It's not just specific or idiosyncratic. Is there anything that can be done to help increase or make the Saudi Arabia a more attractive destination?
The reform momentum has to continue, and what we're seeing in the region, so you mentioned the global scale and the fact that global FDI is under pressure, but everyone's competing as well for that same share of FDI. So we have Egypt implementing reforms to try to attract FDI, the UAE, Saudi Arabia, many different economies in the region are on this journey to reform, to stick to their reform commitment and to try to attract FDI.
A quick word on Egypt, since you bring it up. We've got the Egypt meeting tomorrow, the Central Bank of Egypt rates decision. Has the time come for them to start cutting rates? We've certainly seen a drop in inflation levels there.
We believe so. We believe the time has come. We believe the global and domestic conditions are conducive. But we do believe that the central bank may want to err on the side of caution. So for us, it's a question of when the central bank will start cutting, not if. And we probably see it sooner rather than later.
Carla, always great to chat to you. Thank you so much for coming on our show today. So much to discuss here in the region. Carla Slim, MENA Economist at Standard Chartered. Now for a look at some of the other stories we're following. Turkey's annual CPI eased sharply in August to 52% from 62% the previous month. Despite inflation slowing, this latest figure is still more than 10 times the central bank's official target. Policymakers are aiming to reduce inflation to 38% at the end of the year, but most economists predict it will still be closer to 42%. South Africa's economy expanded in the second quarter by 0.4% after flatlining in the prior period. The economy's rebound coincides with a reprieve from power cuts. Meanwhile, the South African Reserve Bank is widely expected to lower its benchmark rate by 25 basis points when it meets next month. That's after inflation softened more than expected to 4.6% in July. And Lebanon's former central bank governor, Riyad Salameh, has reportedly been detained after questioning over several corruption cases. That is according to the Associated Press, citing judicial officials. Riyad Salameh served a 30-year term before leaving his post last year. Some in Lebanon blame him for an economic crisis, including a 90% plunge in the pound and triple-digit inflation. Saleh has repeatedly denied any wrongdoing. And Saudi Arabia's wealth fund has tapped the bond market for the fourth time this year as it looks to finance its huge domestic investment plans. Bloomberg understands that the PIF has sold a 3-year sukuk, raising $1.5 billion. Sources say investor demand for the note was almost 3 times that figure at more than $4.7 billion. This latest round of fundraising follows $2 bond sales and a sterling-denominated issue in June. And Delivery Hero has hired banks to work on the listing of its Talabat unit in Dubai. That's as the German food delivery company looks to cash in on a flood of IPOs in the Gulf. Bloomberg understands Emirates NBD, Morgan Stanley, and JP Morgan have been lined up for the deal, which could raise about $1 billion. Delivery Hero has said it's planning to list Talabat on Dubai's bourse in the fourth quarter. Talabat is estimated to have an enterprise value of more than $6 billion, according to Bloomberg Intelligence. Well, coming up, more airlines are checking their Airbus A350 fleets after Cathay Pacific's mid-flight discovery of an engine component issue. We're going to talk more about that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. More Asian airlines are checking their Airbus A350 fleets after Cathay Pacific discovered a faulty engine component on some of its planes. JL, Singapore Air, and Air China are amongst those undertaking checks. Bloomberg's Asia Global Business Managing Editor Rachel Chang joins us now. Rachel, this feels as though it's turning into another aircraft saga. What is the latest now with these Airbus planes, the A350s?
Right, so fortunately what we're seeing is that the impact on disruptions and flight schedules really so far remains on Cathay Pacific, which has cancelled a number of flights until Saturday. Singapore Airlines, Japan Airlines and the Chinese carriers, they're saying that they are checking their jets, but so far they haven't needed to disrupt flight schedules, and that's a big relief to travelers, of course. I think overall we're still very much in a wait-and-see mode because the carriers and the airlines are really trying to take their cue from the regulators, the National Aviation regulators and Airbus and Rolls-Royce themselves who are making the planes, because the airlines really don't have the capacity to really assess how serious this issue is. It will need to be the manufacturer that tells them what needs to happen now.
Yeah, and of course safety comes first, but let's just talk about the long-term impact. With Boeing, it was one issue after the next, and it just feels like the company has been embroiled in so many issues over the last couple of years. Is this incident likely to have a long-term or a short-lived impact on Airbus and subsequent airlines?
Right, that's exactly the fear right now, because with Boeing embroiled on so many issues, as you said, and really doing that restructuring on their end, Airbus being the other major plane maker really needs to continue to be able to have those supply chains running very efficiently. So I think what is the greatest fear right now, and we're hearing from some sources, is that the parts needed to repair these problems in the jets, that could be coming at a shortage to the component assembly lines, because these parts are really in high demand, and that could slow down the overall operational lines and slow down the production of more planes. As we know, globally, there's a huge demand for planes, that the backlog is really a couple of years long. So really, this really just means that manufacturing of those aircraft is going to be slowed down even further.
And has this had any impact on flights themselves? Are we seeing disruptions in terms of scheduling, takeoffs, delays? What has been the impact on travelers?
So far on Cathay, the impact has been pretty severe. They've had to cancel over 40 flights up for the rest of this week. So Hong Kong travelers, of which I am one, are the worst hit by this. But we're not seeing any other regional airlines report yet any scheduling delays, which is a relief. And like I said, these airlines are really waiting for Rolls-Royce and the regulators to tell them what to do. So it is possible that we'll see more delays going forward as the regulator or Airbus decides to pull these jets for maintenance.
Bloomberg's Asia Global Business Managing Editor Rachel Chang, thank you for the latest. Well, coming up, African leaders gather in Beijing as the Forum on China-Africa Cooperation gets underway. We look at what China is looking to achieve next. This is Bloomberg.
South Africa has a huge unemployment problem. It has slow economic growth. And obviously we want to do whatever we can to stimulate that. Obviously you want to protect local manufacturing from crowding out by exports. And I think it's a balancing act about finding compromise on what we can bring in and what we can export, and trying to find that fine balance there so that you don't end up damaging local industry through imports, but you also are able to maximize the ability to export to markets like China, and huge opportunities for South African agricultural products.
South Africa's agriculture minister is speaking to Bloomberg in Beijing, in China. Well, African leaders have gathered in Beijing as the Forum on China-Africa Cooperation begins. It is the first such summit since 2018 and the biggest diplomatic event President Xi Jinping is hosting this year. Bloomberg's Andiro Ganga joins us now from Kigali. We're talking about the significance of the summit, but of course, China's heavy lending to the continent has been a big feature. It has grown a lot in the last couple of years, but some people have called it debt trapping. How so?
Jumana, if you look at China's lending to the continent, it has exponentially grown. Let's go back to the year 2000. They only lent 98 million. Fast forward to 2016. This amount had grown by hundreds of folds, and it was at about $28 billion where it peaked. And then the pandemic happened and lending to Africa plummeted, but then it has begun gradually picking up at about $4.6 billion in 2023. These are amounts that nobody else is lending to the continent. And it's also important to know that Africans have high affinity for Chinese money. In the last 2 decades, we've seen the continent embark on mega infrastructural projects that need massive financing. China is ready to give that money without the conditionalities attached to money from the World Bank and the IMF. However, the more you borrow, the more your debt accrues. It began putting pressure on the national budgets. COVID happened, and then we began seeing defaults. Zambia defaulted, Ghana defaulted, Ethiopia defaulted, and even those who haven't defaulted are currently in debt distress. Take Angola, for example. A third of the external debt is owed to China, and this began raising questions on debt sustainability in Africa with regards to China. China is also having their moment of truth, because during restructuring talks with Zambia, they had quite a tough time, 4 years, to agree on how they're going to split the losses amongst themselves. And now we are seeing them move away from these infrastructure projects, going to renewable energy and things like natural gas, and lending to countries that are not highly indebted to them.
Yeah, we were just taking a look back of the evolution of China's lending to some of these African nations, but let's flip the board and maybe talk about how that debt was accrued in the first place, because it seems to me that the COVID, the pandemic, was actually a big catalyst for African nations to take on debt.
Jumana, infrastructure is the common denominator here. China has pumped nearly $120 billion in the continent under the Belt and Road Initiative. They've built hydropower plants, road and rail, and this is where majority of that money has gone to. In exchange, they've been able to gain influence on the continent. They've also had access to energy and minerals. Take, for example, DRC, where they have massive stake in copper and cobalt. And these projects have been successful to a large extent. Take Zambia and Zimbabwe, for example, $2 billion and $1.5 billion in hydropower plants that have helped ease their national blackouts that we're experiencing. On the other side of that coin are projects that have failed to live up to expectations. Take Nigeria, for example. Their light rail project, nearly $1 billion, is not functional, and every year this country is paying $50 million back to China. And so questions are being asked on, is this feasible? Are these infrastructure projects actually worth it in the African context? But these questions remain as African leaders are streaming to China, just going to showcase the economic and dominance power of China on the continent.
Yeah, such an important story. Bloomberg's Andiro Ganga, thank you so much. Now for a look at some of the other stories we're following. Turkey is working towards teaming up with China to process a deposit of rare earth elements, a partnership that can make the country more appealing to Chinese manufacturers of EVs and batteries. 2 years ago, Turkey discovered what it described as a large reserve of rare earth elements. The Energy Ministry has said it is ready to build a refinery there to process the raw material. The move follows Turkey's formal bid to join BRICS. Nigeria's giant new Dangote oil facility near Lagos will start filling tanks with gasoline as soon as this weekend. It is a milestone that's been more than a decade in the making. The plant will be able to process 650,000 barrels of oil a day when at full capacity, and it is expected to be able to turn more than half of that into gasoline. The move will likely be welcomed within the country, given that the state oil company has been unable to supply gasoline due to debt and rising prices. All right, let's turn back to equities because of the big market moves that we're seeing, a big, sell-off that started off in the U.S. session yesterday with the S&P ending 2% lower, NASDAQ more than 3% lower. Nvidia down almost 10% in the trade, but then after hours, also we found out that the Department of Justice are launching an investigation into antitrust practices, which meant that the stock was down another 2%, and after hours, wiping out almost $290 billion off the stock. That is the largest wipeout in U.S. history. So should be noted that it is having an effect on the broader tech space, some of these semiconductor names getting hit as well. Our terminal chart for today, we were looking at the semiconductor index yesterday, the SOX ETF, saw its worst day in over 4 years on back of the decline in Nvidia. So we are seeing a broad-based risk-off move, not just in the U.S., in Asian session, and as we head into the European session as well, Euro Stoxx futures are pointing to open down in the red. Quick look at oil because we plummeted 5% in yesterday's session. Lots of questions about what OPEC Plus will do next, but that is it for our show. Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.